Hey, what's up, everybody? Look at total 3. It is trying to basically retrace this recent correction we had, right? We were bullish, we started to consolidate, and then bam, we had a big drop, right? I think that was Thursday, and it took a lot of money away from the market. But back when we were up here, we talked about a big possibility for the price to come back down and back test this breakout level. So let me just change the color there so we can see that's exactly what happened, and that's actually a good thing, right? So when we came down, and also another incredible thing is to back test the bull market support band, come back up, right? You run into the resistance, come back down, make a higher low, back test the bull market support band, come back up. Now you got resistance, but then you kind of swoop in here, right? Instead of having to come all the way back down, the price actually created this base right in here, right? So if you take this whole wave, so first of all, look at this wave. It had to come all the way down, right? This wave, it came down, but it went sideways in a base near the top half of the wave. So if you take this whole wave right here and you cut it in half, 50%, the price oscillated within the 50% of this wave. So it didn't need to come all the way down, which is a bullish sign, right? So then what happened? Then the price coiled up, right? It came up again, but look, it got rejected. That's okay. Came back down, and then bam, it broke out. We got the breakout. So everybody goes, yay, we got the breakout. Let's go long, 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 long. Everybody leverages long, and then what happens? You come all the way back down. Why? Because you need to confirm the breakout. Why? Because it's not confirmed until you test it as support, right? Because testing it as resistance is one thing. That's easy. Breaking out is easy. Coming back down to back test to hold it as support, that's hard. And so far, we got the job done. And what happened after we back tested this level? Well, look, we're starting to go up here. So that is actually a really good sign. I'm glad this is playing out, right? I mean, we're not out of the woods yet. We're not out of the woods yet, not even close, right? Because when you put the Fibonacci, by the way, I'm very bullish, very bullish. If you've been following my channel, you know exactly my thoughts and how this market has been playing out. But look at this. We came all the way up. This is the do or die moment. This is the most critical moment for crypto. And I'm not saying that just to say that. I'm serious. Why am I serious? Because this is basically right at the 618, right at the 702 618. That is the big thing we got to get through. And why is that so important? Well, take a look. Because right here, right, this is where we're at. We need to get through these retracement levels. The big reason why is because when you zoom all the way out, the big picture is also right in the middle of the retracement level. So not only, right, you're working on trying to get out of here, but you're also trying to break the big cycle that we just had here. And right now, that is approximately at the 50%, almost to the 618. So it's important that we can break this. So let me zoom in here, right? So let me take another Fibonacci, and I'll put this one right here. I'll put it down, right? I'll get rid of that. It's important to break this area, right? Especially, 786 to the 618. It might take some time. And I mean, sometimes that usually happens, right? Where you come up, you get a rise, you get a crash, you get a retracement, you come down for reaccumulation, you might go sideways a little bit, right? Start to build up some steam and then pop, right? I'm not saying that's exactly what's going to happen. I don't know exactly what's going to happen. We can use TA to kind of figure some things out based off probabilities. And, ever since, we were back here in October, we've been calling for a retracement, a big retracement. So literally right here in October. So you can go back, if you're new to the channel, and you can verify that. But at the end of the day, it's not about me being right or being wrong. It's about you making money, right? And not listening to me and making money, but you doing it yourself. You're working, you work hard for your money. You're putting it in a position of strength. And basically why I do my YouTube channel is because I'm bullish on crypto when you look at the long-term picture, right? The macro picture. So when I zoom all the way out, I see a chart that is not complete, right? This is total 3. This is all of the altcoins except for Bitcoin and Ethereum, right? So we have a wave 1, right? We have a wave 2. We have a wave 3. We have a wave 4. Where's wave 5? We're still in the wave 5. So my idea for this channel is to track the wave, right? Is to track how it's going up, the different corrections, the different pullbacks. Are we in the 3rd wave? Are we in the 4th wave? Are we in the 5th wave, right? So we also have subwaves in between that. So you can say this is 1, 2, 3, but the problem with this is it's not 5 waves, right? So you can say that this is an A, B, C, right? The problem with that is it's not 5 waves. So that's another important reason why we need to get through this retracement level, right? And then also, if we do get through it, then we're going to make another push to the upside. And that, my friends, would be the 5 waves, right? Because we would have then 1, 2, right? All of this is wave 3, right? In wave 3, you have 1, 2, 3, 4, 5. So we have 1, 2, 3, and this is wave 4, and then we push up for wave 5. So it could be technically a 1, 2, and this is the middle of the 3rd wave, right? And hopefully that 5th wave, there's going to be subwaves in that 5th wave, but hopefully we get, some pullbacks. I mean, obviously we'll get pullbacks, but we'll get 5 waves in the 5th wave, because unless it's 3, then it won't be. It'll be a part of a bigger correction, and we'll cross that bridge when we get there. But so far, it's 1, 2, 3, 4, 5, right? Doesn't mean it's happening today, tomorrow, next week, or even next month. But the idea here is to get this correction finished, right? Again, getting through those retracement levels is going to push that wave higher, which ultimately means we're going to get higher on the macro Fibonacci level, because the big thing we got to get through is about 956 billion to 813 billion, right? And then we have one more little line here at the 886. So between 813 billion and 956 billion, right? Maybe it's not right on the dot, but it's in that area. We have an opportunity to get through that, right? So let me take this off now, right? And then if I take the Fibonacci here, let's see where the targets are. So typically you want to target at least a 1618 extension. And look at that. The 1618 is right there. So it actually gets us right at the top of where we need to be. So it'll be a very interesting situation if we can get through that area. So let's see if it's possible. So I'm actually going to take this off, and what I'm going to do is I'm going to zoom in and see what the heck is going on here. So I'm going to give some ideas. Now, one of the ideas, right? Well, let's do this. We'll do the bearish ideas first, right? Because so long as we're in the retracement levels, a bearish situation can happen, right? So if this is 5 waves already, 1, 2, 3, 4, 5, then that's okay, right? I mean, that's good. And then you can say this is a 1, 2, 3 or an ABC, and then that's perfect, right? So we're building a base on the bull market support band. That's also good, right? So now we're basically getting ready to continue higher. But if this is a bearish idea, this is going into a retracement, right? So we're not breaking through the retracement. Instead, we get rejected by the retracement levels. So two things can happen, right? Either this is going to be an A, B, and a C, right? And then we go, which is totally fine and totally it could happen, right? It's still a bullish idea, but just from a bearish time perspective. The other idea is to say that this is also bearish, but not so much as price, more so with time. We have a rise, we have a crash, we have a retrace, we come down for reaccumulation, we go sideways here, we build a base, and then we break out. So rise, crash, retrace, reaccumulation, sideways, breakout. And that's typically what happens. You can look at Bitcoin, and that's exactly what happened to Bitcoin back in the day. You can see right here, I'm actually going to have to zoom out a little bit. This is exactly what Bitcoin did, right? We had a rise, we had a crash, we had a retracement, we came down for reaccumulation, we went sideways, and then bam, we broke out. So is that what's happening now on the much smaller time frame? We'll have to wait and see. So going back to total 3, right? You can even see it happen to total 3 as well. We had a rise, a crash, a retrace. We went sideways into reaccumulation. We blasted off. So that could totally happen here, right? Which would actually be a good thing. Why? Because you're building a base here, you break out, and you build another base here, right? So you're stepping on, right? You're stepping up the ladder here, right? Building a base on top of a base to get that breakout. So if we can do that, then what we want to see here, right? It'd be a 1, 2, and then we can get 3, 4, and 5, right? We can get a 5-wave move, and that would clear all of the the corrections that we've been dealing with on the macro time frame, right? So if we can get above or even hit that 618, we would be looking very good, right? So let me zoom out one more time, put the Fibonacci back up, right? And there you go. So that would be a nice thing to see, right? So that's that's even a bearish idea, right? Because of not on the macro, but in the short-term price action. The other idea, right? So that there's two ideas. The other idea is to say, you know what? This thing had a wave 1. We pulled back into a wave 2. We developed a base, right? And now we're starting to pump up. So we'll pull back a little bit, maybe flag out a little bit, pull back a little bit. It's going to keep grinding, and then eventually, bam. So, I think that's a very good thing. I mean, we have the Ethereum ETF. I believe an XRP ETF is on the way. I believe the XRP lawsuit, right? It doesn't matter about XRP. It's bullish for all crypto. Because if you look at it, you go, well, Bitcoin did it. I can do it too. Well, if Ethereum did it, now I know I can did it. Well, wait a minute. XRP did it? Oh, I know for sure now we can get it done, right? So everybody's going to have that confidence, that momentum, that forward drive that, hey, if those guys can do it, I can totally do it as well. Right? So what that does is it basically validates what crypto actually is. And again, we have an election coming up, so hopefully you know who to vote for, right? I'm not going to tell you who to vote for, by the way, but I'm just saying, know who's pro crypto and who's not, because this next election will determine if your portfolio flies or dies. So choose wisely. By the way, I'm voting for Trump. Just FYI, not to be political, but that's my choice. And, I think we'll have a very good chance at winning. And, basically it all comes down to crypto innovation and basically bringing utility to the market so that it can be implemented, because basically right now this is all speculation, right? It's all speculative. So we need proper regulation. We got the bill passed through the House. Let's get another one passed through the Senate, right? And then the president signs it. We can start building on regulation. And then because ETFs are one thing, but at the end of the day, an ETF is just a derivative or basically a security of that token, right? So it's not, I mean, it's technically the real thing, but it's really not. So instead of these big institutions buying an ETF, why don't they just buy the actual thing and have different custody mechanisms? But that's a video for another day. Right now, I see this as a Wyckoff accumulation structure, right? So this whole thing, by the way, could be a talking bearishly, could be a rise, crash, retrace. We come down for reaccumulation. We go sideways, and then we break out, right? Because you have a base here. We come down and we build another base on top of this base. That could totally happen. I don't think it's going to happen because this base right here is so big, and it also is a Wyckoff accumulation schematic that basically played out perfectly. So this was our base. This was our launch pad. We broke out. We back tested the base. We continued higher. We back tested the bull market support band. We consolidated here, right? We're consolidating. We're trying to break this resistance, right? We're trying to get above here. So, we're stuck in between. I mean, you can see this range from the top to the bottom, and that's kind of where we're at now, from the top to the bottom. So if we can break this, right, and also it kind of looks like a little, maybe not, a shoulder and a head and maybe another shoulder here, which would be interesting, right? You're cupping, and that's another thing. Are you spiking into the resistance, or are you cupping into the, cupping is much more bullish, right? That's why back over here, you can see that when we came up, that's why we went rise, crash, retrace, reaccumulation, sideways, breakout, because this spike, right, we didn't have a base down in here. We basically came all the way down, all the way up. And when you do that, you need to flag out. That's basically what you need to do, which is basically reaccumulation. But since this base right here was so big, and since this thing is nice and rounded, it's a rounded shape, then that tells me we don't necessarily need to come down for what some people say is an ABC, right? A lot of people say that this is 1, 2, 3, 4, 5, and this is an A, this is a B, and then we have to come all the way down for wave C and back test over here. So basically an ABC. I mean, it totally could happen. It totally could, right? I mean, if we had a big black swan, Joe Biden, Federal Reserve, central banking, corrupt system, collapse, cyber attack, whatever, you name it. Yeah, I mean, it could happen. A big ABC, right? We build a base here and then we go. So that would be, take another, that would probably won't be till, 2026. Right? So, are you ready for something like that? I don't think that's going to happen, but you never know, right? Especially, if our next president's going to be pro crypto, if we have an Ethereum ETF, if we have all of this momentum rolling in, right? Then I can totally see it. So, yeah, that's kind of what I'm thinking here. A little bit of technical analysis, a little bit of, I guess you could say, fundamental analysis, a little bit of an outlook here. But yeah, that's total 3. By the way, if you're interested in XRP, I put I think a really good video out just yesterday called The Greatest XRP Presentation, Part 1, talking about XRP, Ripple, the ETF, the IPO, the lawsuit ending, just different things like that. So if you want to check out that video, highly recommend, especially if you hold XRP and even just hold crypto in general, because there's a lot in there, I think. Okay, let's switch gears. Look at Bitcoin right now. She is starting to pump up pretty nicely here. So Basically, you know, when we go to the weekly chart, right, we have less than 24 hours until this weekly candle ends. So basically, the goal was to have this candle end above this zone in here, which clearly it did, right? And then another goal, right, is to close above the, let's put the Fibonacci here. We'll bring it down. Basically close above the 702. That is, I mean, wow, that is the most, if, look guys, if we can close above 68,639, then I think we have an incredible opportunity, probability speaking, to break out. I mean, this is pretty impulsive. I like the candles here, right? Let's look at the candles. So you can see, right, when we go all the way back down, this is a bullish hammer candle. This was a flat ABC, right? We had a bullish hammer candle, and then it set off the sequence of bullish engulfing candles impulsing to the upside, right? You can see how they're impulsing. Then you can start to see how they're correcting, right? They're not impulsing down. You can see these long wicks, long wick, long wick, long wick, long wick. That is buyers stepping up to the plate, buying the dip, right? That's what that is. So look at this candle here. This is a bullish hammer candle. That green candle right here, we came all the way down. We back tested the bull market support band. That's exactly what this candle did here. And look what happened after that. So candles, the shapes of the candles, the way they look, very important. So then, right, we back tested it. We broke all, you know, we bought up really quick. We came up to the resistance here. Then this candle, I remember this week, we came all the way down and retested at 50%. That's normal. Then the following week, bam, we broke out. Then this week, we had follow through. That's important. That's very important. So the goal is to close above the 702. I mean, it would be nice to close above the 786, and heck, we might even do it the way it's, you know, kind of shaping up now. We'll see on the smaller time frames. But we have to close above this, because if this wick right here, you can see this wick, it's getting pretty long, and we don't want it long, right? Because the longer the wick, the more people look at that as a rejection. For example, see how it came up? See the long wick down? The wicks on the bottom is good. The wicks on the top is bad, right? Well, not bad, but you know what I mean. It's getting rejected. So we want the body of the candle to be bigger than the wick itself, or the wick will overshadow the candle and it will look like, you know, a topping tail, right? As they call it, some type of reversal candle. But right now it still looks impulsive. It still looks healthy. So we really need to close above the 702. We broke above the 618, and not only, you know, this candle over here, it didn't even break above the 618. So not only this candle is the, that's why I've been saying this whole week is so important, and it's just hilarious. Think about this. I think this, you got to like the video and you got to share the video, because this is, I think, exquisite information in my opinion, because look at where we're at. Right? And look at this candle. This candle was so important because, you know, getting through the 618, getting through the 702, right? But what happened this week? What allowed that to happen, right? Well, we had the crypto bill that got signed and not signed, but actually passed through the House. It still needs to go to the Senate, which I believe it will succeed, and the president still needs to sign it. Then literally 2 days later, right, or the next day, I think, the Ethereum ETF passed, right? And then Brad Garlinghouse tweeted out, this is momentum. This is what we need, right? And then, you know, kind of giving a little wink, wink, wink to the XRP community, posting interesting things. I mean, look at this. First of all, look what Trump tweeted out, right? Look what Trump tweeted out. So you could pause the video and read it. But, you know, that's what he said. So the big thing is crypto innovation leaving the United States, because at the end of the day, the central banks run the world, and the Federal Reserve is the top notch, right? So the central banking system is anti-crypto. That's basically what it comes down to. And they do not want crypto to succeed. That's why a lot of the Democrats didn't want to vote for it. But they voted yes, not because they love crypto, but because they knew the election was coming up, and they just did it to look good, when in reality, they would have killed it instantly, right? So, you know, we cannot have companies, brilliant minds, like, people with brains the size of Albert Einstein, leaving the United States because there's no proper framework for regulation. There's no, people are so afraid to get sued. I mean, look at Coinbase, they get sued. Look at Ripple, they get sued for no reason, right? They're trying to do the right thing. They're saying, hey, what do we need to do to be compliant? The SEC comes, okay, come and register and blah, blah, blah. But it's all bull crap, right? And then when you ask Goldman Sachs, Gary Gensler, a central bank boy, puppet, he basically just shoots it down, right? And it's all ridiculous. It doesn't need to be this way. He's a puppet for the central banks, and the banks want to delay, delay, delay. Why do they want to do that? Because they want to kill crypto. Why? They don't want to kill it, by the way. They want to basically kill time until they get their central bank digital. It's all about the CBDC. They don't want Bitcoin. They don't want XRP. They don't want anything. They want CBDC and nothing else. Why? Because every single dollar that is outside of the central banking system and inside crypto, right, is basically a death blow to the central banks. Think how large the central banking system is. You know what I mean? By the way, here's the Brad Garlinghouse tweet here. So, I mean, when I see this, I mean, he doesn't normally tweet that. He's really humble about XRP. He doesn't come out, and so that, I thought that was interesting. But, so, I mean, yeah, they want to delay crypto regulation so that their CBDC can be established, right? Once the CBDC is established and it's strong, then they'll sort of allow crypto to kind of, tax the hell out of you, right? Because they still like crypto only for tax reasons, right? So they, you one day you got 20 grand, the next day you got, or the next couple years you got a couple hundred grand. Well, they like that because you just made money. But guess what? They don't care that you made money. They want to tax the money, right? So that's what it comes down to, is stealing. They don't want crypto to sort of take over the financial system, like DeFi, right? Why do we need central banks? Why? Why do we need a bank to facilitate our financial services when you have AI, right? The central bankers laugh and they go, ha, 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 ha. Your McDonald's job is going to be replaced by AI. Ha, 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 ha. And then you know what we say? Yeah, guess what? Your central banks are going to be replaced by blockchain, right? AI or whatever. And financial services, right? We don't need you. We need, we want DeFi. DeFi, decentralized finance, not centralized central bank finance, because central bank finance means they need to make money, right? Banks are in business to make a profit. So who are they profiting off of? You, right? And you say, well, they're not taking any of my money. I got 10 grand in the bank, and I always had 10 grand in the bank, and I'm building interest. I get 2 pennies a year. Well, guess what? They do take your money. You don't realize it. First of all, they loan your money out and multiply that by 100. Then what they do is they print money, which means your 10 grand 10 years ago was 10 grand. Today it's worth less than 6 grand, right? So inflation, right? People who have large amounts of cash in the bank, right? They're getting killed with inflation. Killed. So the banks, they don't want people to basically transmit their crypto into, or transmit their dollars outside of the banks, inside of Bitcoin, inside of crypto, right? So, we're coming down to this situation where, is it going to be, the central banks and the tyrannical deep state puppets like Elizabeth Warren, do they win? Or do we have, freedom, innovation, crypto companies building, and, utility coins actually playing a role rather than just being speculated on, right? And that's why I am voting for Trump, and, we'll see. We'll see how that works. But what other choice do we got? And by the way, I think he's going to do a good job for crypto. So let's go. Here's the thumbnail I made. I thought it was actually pretty cool. I'm not good with thumbnails, but I thought this one actually came out pretty cool. You can see Maxine looking like, oh no, what's going on? We don't want this. You can see Trump pointing up to the moon, to the sky, right? And then you can see Joe Biden like doesn't know what the hell's going on, has the anti-Bitcoin thing. We can see right here, this was Brad Garlinghouse. That's Christine Lagarde. That's, a bunch of high-level people in the central banks, right? Just look at Brad Garlinghouse. Not so long ago, he was on stage with the IMF. Come on. So crypto's not going anywhere. So circling back to the charts, right? We have the weekly candle, right between the 702 and the 786. This is the best possible thing you can do right here, right? Because when I zoom out, when I take this Fibonacci and I put it here, and then I take this all the way down, we have already cleared through all the Fibonacci's on the macro structure. So you can see, right, we're at the 1-to-1. So we're trying. So here's another thing. Let's actually match that up. Try to get it right on the dot here. So look at the weekly candle right here. I could take this out, and I'll just put that right about there. So you can see the one extension, right? Basically the all-time high of what Bitcoin did, 69K or so. That will be incredible if we can break back above. And you can say, well, we already did that. Yeah, but we're doing it again off of this pullback. So that's really important, right? Because what happens is the price runs out of gas, right? This whole thing was one wave from here all the way up here. So it's like, you're running out of momentum. You're running, and eventually, you run a few blocks. I don't know about you, but if I run a few blocks, I'm tired. I'm gassed out. But I back in high school, I used to run probably like 9-minute mile, maybe an 8-minute mile. But now I probably couldn't even do a half a mile. But it is what it is. So we are running out of momentum, so we need a pullback. So we did. We got a pullback right into the bull market support band, and now we're exploding, hopefully exploding back to the upside. So what is the target? The target is actually $102,000. Actually, I don't know. Let me make sure this is right here. Is that right? Yeah, that's right. So the target would be about 102. Now, is it going to get there? That's tough to say. I don't know. It's going to take a lot of liquidity to get it there. But I think, of course, eventually it will get there. Eventually, it will get there. But let's do this. If we did this, right, we could be a little bit more conservative. I'm looking more at 84,000, right? So about 84K. I'm not saying it's going to top out there, but I'm looking at that to be somewhat of a next resistance point once we break this line. So the ultimate goal for Bitcoin is to close on a weekly scale above this close right here, above 71. Let's make sure it's right on the dot, or at least close, about 71,290. If we can close above that, I don't think it's going to happen this week. Maybe it could, but then I think we're off to the races. The only issue that I have is that we're getting into the summer months. Usually summer months are boring. A lot of people are on vacation, you know, a lot of recess, summer, you know, summer vacation, basically, right? So people traveling, people doing things, people not working, not trading. So what happens is the volume decreases. So when you have volume decreasing, right, sometimes it's not so good. So for example, if we were to break out and then the volume basically died, then it doesn't take much for something to do something like that. I don't think that's going to happen, but something even to the upside, right? So so you know, you want a lot of volume to push this thing higher. And regardless, Bitcoin is a monster asset, so I think there's going to be even still plenty of volume in the crypto space because you know, I think people are addicted to crypto, right? Much more than stock market. I mean, when you look at the stock market, it's got that certain persona, but when you look at the crypto market, it's like much more intense. I mean, is it just me, or do I experience that, or do you guys experience that as well? I mean, crypto is just more. It makes you feel more alive. Put it that way. It's faster. It's got more speed. You know, I don't see any 25-year-olds being instant millionaires from investing into a Coca-Cola stock. You know what I mean? Or Walmart or whatever. I mean, even Nvidia, right? I mean, I wouldn't even touch that thing because it's way out of my. It's Nvidia is just insane. I don't even know. It this just keeps pumping and pumping and pumping. So it's weird. But yeah, let's look at the small time frame real quick, and we'll wrap this video up. I don't want it to be long. So what we talked about before, right, on the small time frame, is this area right here. So you can see right here we have resistance, obviously, right, and then resistance. And then what did we do? We came up just like total 3. We broke out, and what did we do? And by the way, this line that I had here was actually the all-time high back in 2021, I think. Yeah. So it's interesting how it kind of lines up here. So we need to get back above the all-time high, right? That's why I said, everybody goes, Bitcoin broke above all-time high. We broke above. I said no. I mean, yes, technically we did, but we really didn't, right? Bitcoin still hasn't tested the all-time high. Why? Because here's the all-time high. We got above it a little bit, right? And then we got up a little bit more, but it wasn't enough. Like we dipped our toes in the water, but it was only liquidity, right? It wasn't nothing of a run. So we basically, you know, we poked our head in a little bit, you know, barely anything. So technically we hit it, but as far as a wave, an actual momentum wave, no, we have not entered all-time highs on a wave yet. So, you know, we came from way down there, right? And we came all the way up. We hit the resistance. We pulled back in an ABC, back test the bull market support band. We created this resistance. We broke out, and then we back tested it. So, you know, one of the things I was talking about right here is the possibility to come down and back test it. That's exactly what we did. So now what? Well, now it's challenging, right? Because now, once again, we're stuck right in the middle of the retracement levels. So you have point A and point B, and you're right in the middle between these two waves. So a lot can happen here. So it's either up or down, right? It's up or down. So if it is going to go up, how would it do that? Well, so far, right, we came down, we back tested, and we did it with an ABC. So it could be finished, right? This could be a 1-2, right? And maybe we're just kind of flagging out here before we push up a little bit more, maybe flag out again, and then continue high. Totally possible, right? Another thing is, let's look at the smaller time frame for this. Let's go down to the 45-minute chart. Okay, so we have 1, 2, 3, 4, and 5. So we have a 5-wave move. So here's some ideas for the short term. So number one, I'm going to start bearish first. So number one, this is an A, right? We have a 1, an sorry, 1 second. We have an ABC, we have an ABC, and now we're coming down, ABC. So the whole thing becomes an ABC. It basically is a complex correction, a double correction. And what that will do is you're going to come down here and back test retest this, right? Because you broke out here, you retested it, right? So you could come down and test it again. Or, yeah, so somewhere in that area. So let me, so to get an exact sort of target, I can put the retracement on here. Yeah, look at that, 618, exactly to that line. Perfect, perfect. So that comes into 64,690. So that's idea number one, starting with the bearish idea first. And if that idea occurs, right, if that idea occurs, it would actually be very bullish. Why? Because what that would be, ladies and gentlemen, is a 1-2, right? It'd be a 1-2, 1-2, which would set us up massively for a big third wave to the upside. So actually, I would not mind that at all. You know, I would have to adjust some of my positions for my trades for that. But yeah, that would be a beautiful impulse to the upside because, you know, a 1-2, 1-2 gets you a 4-5, 4-5. So it actually extends the wave much more, right, than a 1-2, 3, 4, 5. If you get a 1-2, 1-2, you get a 3, a big 3, a 4, 5, and then another 4, 5. So it's something like that, where it basically extends it out a little bit more. And these are pretty big too, so we'll see how that goes. Now another idea, same concept here. Let me zoom in to the 30-minute. The other idea is we broke out, right? We came down, we back tested, right? So we had a back test. We're coming up into the retracement levels, right? And then basically we get stalled out, right? Maybe we get a little bit higher, we get stalled out, and basically we go sideways. So rise, crash, retrace, we oscillate, reaccumulation, right? And then bam, blast off. That would also be perfect and beautiful. And essentially, you know, you have this base down in here and you're building a base on top of it, which would be great. The other idea, right? So that's idea 2. Idea number 3 says, you know what? We're completely finished, guys. We're done. We're done. So we have a finished correction, right? One, or A, B, C. It's over, right? We got the ABC. We back tested down in here. We had a 1-2, right? And now, actually, let me do, so 1, 2, right? And then we had 1, 2, 3, 4, 5. So this whole thing is a 1, 2, 1, 2, right? And now we're kind of flagging out. Maybe we have an ABC correction down here, right, to retest this area, and then basically go on our way to the upside. Now it's not gonna do it the exact way I draw it, but you know, basically explaining the concept of ABC. We're finished, 1, 2, and now we're ready to go, rock and roll. Let's go. So those are the 3 ideas. Which idea am I leaning toward? It's very tough to say because, you know, when you're right in the middle of those retracement levels, a lot of things can happen. You'd have to really zoom in. So one of the things bearishly I can say is that this is an A, this is a B, and then we have 1, 2, 3, 4, 5. So this whole thing becomes an A, B, C. So we have a finished three-wave move here, right? So that could be a B wave. So this whole thing is an A wave, 1, 2, right? 3, 4, 5. So that's wave A. We come up 1, 2, 3. That's wave B. And now we're starting to work our way down for wave C. That could totally occur. So that's kind of what I'm thinking at the moment. Now, it can turn into reaccumulation. It basically has got to prove itself to me. It's got to prove itself. We did break above the downward resistance line. I like that, right? You can see that. So what would change my mind is if we can start to consolidate here, right, in this range without taking out this low, right? If we take out that low, then I'm going to think, nah, we're probably got a little more down. But if we hold that low, I'm pretty confident we can continue marching higher. So, yeah, and that line actually comes to that 618. So actually I can move it down a little bit. So I would actually put that right about there. So as long as we hold this little box here, I think, we're still prone for more upside. If we lose the box, remember, this is the 30-minute chart. So it's going to happen fast. It's going to happen real quick. So, I would just look at it as a C wave. But you always got to look at the bright side. If that occurred, remember, we would have a big 1, 2, 1, 2 on our hands. So just remember that. So, always look at the bright side. If we do come down, look at it as a 1, 2, 1, 2. It's going to be a little scary and it's going to be uncomfortable. And you might even see bullish or bearish things come out, like bearish news, bearish YouTube videos. We're topping, we're going down. Totally, right? But as long as we hold above, I would say 62 to 64K, I say we're doing really well. So, yeah, it is Saturday, and basically we're going sideways, right? So this area has got to work itself out. So what happens here depends if we can break below here or break above here. But as long as we're in the middle here, it's kind of tough to say. I'm inclined for a breakout simply because we have a three-wave shape. But how we get that breakout, do we come down and test the low? Do we go into reaccumulation sideways? Whatever the case is, at the end of the day, if you're a hodler, it doesn't really matter. Doesn't really matter, because when you zoom out, this is bullish. You have a massive bullish rally, and you have a massive bull flag, right? You have a downward channel. You're impulsing up, you're waving down. Impulse up, wave down, back test the bull market support band. We broke out, so now it's up to the crypto gods to send us to the promised land, right? So we'll see how that plays out. But for me, no reason to be bearish and every reason to be bullish. Now, that could be a little bit of a problem, because if so many people are bullish and so many people are leveraging long, sometimes you get liquidity traps, right? Where you come up, right, and you kind of play around, you spike the high, and then you come down hard. And everybody goes, oh no, it's over, right? But what happens is it kind of comes back and it continues higher. So, liquidity events can happen very quick. And basically everybody's leveraged to go up. But then you come down, take everybody out, and then go up. So be cautious of that. I'm not saying that's going to happen. And if it does happen, I don't think it's going to happen now. I think it'll happen. If it did, it'd probably happen a little later. So we'll get indicators or indications if that's going to start occurring. But right now it's starting to look a little bearish to me. Of course, we ran right into this resistance. You can see all of this resistance, right? So we might have to come all the way down here and retest this area, right? Which would be fine. So that'll do it, guys. Appreciate everybody. I will catch you guys in the next one. Cheers.